Good evening, traders. This is Taylor. Thanks for stopping by thetradinganalyst.com. We're going to run through a bunch of charts here, starting with the S&P 500. But first, if you're not already a member, go ahead and visit the home page and start your 100% free 7-day trial today. All you need to do is enter in your name and your email address, and you're going to get instant access today. No payment information is required at all, just your name and your email address, and you're going to be able to take advantage of all of the member-only features like the live market broadcast with the HD audio and video feed screen share. Also the chat room, it's professional, it's open, it's honest. All questions are answered in real time. We also prepare you each day with a precise, detailed watch list as well as member videos. And you have the exclusive opportunity to profit while you learn from the profitable trade alerts that we give you while you're learning to trade in the market. It's a great opportunity, and I suggest that you take advantage of it. All right, so let's take a look at these charts. The S&P 500 right here, we've got a channel on the S&P 500. We've got a channel. The top of the channel right now is right around 207. The bottom of the channel is right around 203. So I suspect we could see some kind of a bounce around that 203 area. Okay, so don't get too bearish or too bullish on any range, because we can kind of chop around. As you can see over here, we chopped around for quite a bit until finally breaking over here. Okay, so my make or break level here for the S&P 500 is a close below 203.75. We have to close below that level. If we do that, then we're going to be heading lower here. On an intraday basis, we can get a bounce around 203, but again, a close below 203.75 is going to send the market lower, most likely to retest this support down here at about 194. All right, next I want to cover Apple. Apple, today we had a false, not today. On Thursday of last week, we had a false breakdown on this action here. We broke below a major support right here. Okay, we did so with convincing fashion right here with heavy volume. Then on Monday, yesterday, we had a break over this downtrend line as well as a break back over this support on a gap up on some strong volume as well right here. So now we've got support at 92.55 and resistance at 95.75. We break over that, we're going to tag this resistance up here at 98. We break over that, we're going to come up here and we're going to fill the gap up here at about 104. Next, I want to cover Netflix. Netflix, we're still below this downtrend line. In fact, it got rejected right at that downtrend line today. Right now we have resistance at about 89 to 90, and then we've got support at about 88.30, and then some more support right about here at about 87.30. Below that, about 85.80 down there from the lows of these few candles right there. Next, I'm going to cover Twitter. Twitter, easy levels here. Resistance at 14.87, support at 13.90. Okay, from these lows over here, if we close below 13.90, then Twitter is going to head much lower. Okay, as you can see, it's building a base here. Base. Several candles have touched that level right there. So a break below it would certainly not fare well for the stock. I also see that I can draw a downtrend line right here from the highs right there on Twitter. And that's right where we got rejected at today. So we've got a touch here, a touch here, a touch here, here, and again today right here. So look for that to potentially be an area of resistance in the coming days as well. Next, I want to cover GoPro. GoPro, we broke below this support over here. This is the support, about $9.10 from the lows, the previous all-time lows. And right now, we have 1, 2, 3, 4 candles, again, which closed below that level here. We've got resistance at 942. A break below 880 is going to send GoPro lower, and it certainly looks like that's the direction that it's going to head. Next, I want to cover Google. Google here, we've got this downtrend line right here, and that's where we got rejected at today. And we did so in convincing fashion. As you can see, this is a bearish engulfing candle. The open is above yesterday's close, and today's close is below yesterday's open. So the body engulfed the previous day's full body as well. So we not only had a bearish engulfing, we got rejected at the downtrend line, and we also broke this little mini uptrend line right here. So resistance now is at 724. 724 is resistance now for Google. Most likely headed lower from here. Next, I want to cover Facebook. Facebook trading in a box here. As you can see, we've got the highs over here about 120.60 and then 116.27. A close above or below either of those levels is going to send Facebook for a nice move. So no bias here. That's all I'm looking for. Short term, probably gets a bounce on this next touch of about 116. Eventually it could break though. So a close below that level would send Facebook lower, most likely to that gap fill down here at about 109. Thank you guys for stopping by thetradinganalyst.com. Again, if you're not already a member, go ahead and sign up for your 100% free 7-day trial and start making money in the market today. We'll see you over there.